A very good afternoon and welcome. This is the Tuesday edition of Market View. It's exactly 2 p.m. Thank you for tuning in. My name is Lungelele Makakula. Coming up on the program today, our focus is Co-ops Federation speaking on members who refuse to vacate office. Business journalist Nelson Langamandla will join us today in the studio to talk about this issue further. This follows that the Ministry of Commerce, Industry and Trade has had to intervene and suspend the board of directors of the Eswatini Multi-Purpose Cooperative Union and Supervisory Committee in the light of a forensic audit. And for our financial markets today, the South African Rand has extended losses early on Tuesday on concerns over future challenges for the government of national unity and after trading violently on Monday following the announcement of President Cyril Ramaphosa's cabinet. And according to Reuters, at 6:41 this morning, the Rand traded at 18.44 against the dollar. We'll connect with economist Sanele Sibiya for an overview of today's financial markets. For now, let's take a look at international news. Most of the complaints received by the Ombudsman in the financial year 2022-2023 are disputes with savings and credit entities. The Ombudsman Nondumiso Similane said this when sharing the latest statistics of the newly released report, where she stated that in total for the year under review they received 84 complaints.
Our mandate is dispute resolution in the non-banking financial services sector, which will include your credit, complaints arising from the credit space, complaints arising from the insurance space, complaints arising from retirement funds, complaints also arising from securities investments, as well as complaints arising within the medical aid space. In this report, what we reported is we observed a rise in reports that we received in the year under consideration. We saw a total of, 84 complaints in all. And in this particular period, we saw that the majority of complaints that we received per category were 37, and that was the category of credit. And within credit, in fact, there's a lot of other mini types within that, because it will include your money lenders who are not banks. It will also include all those businesses that sell products, be it furniture or clothes, and afford their clients credit. It also includes those ones that would lend money and ask of you to deposit a particular item as security, which would be pawnbroking. So yeah, we saw 37 of those this year. And the next category in terms of the highest number to be recorded was insurance as well as retirement funds, those tied each at 18 complaints. We actually prioritize resolution of complaints through affording the parties an opportunity for themselves to discuss through our facilitating their discussion, whether through a process that we term facilitation itself or mediation, so that they can come to a resolution that they will own through a settlement. We also have seen cases that were resolved through us issuing, in fact, the Ombudsman issuing a decision herself in that case. While it is true that we always wish to maximize resolutions through settlements, it doesn't become so all the time. In fact, that is where we have realized that we still have a long way to do in educating the public and actually bringing it to the attention of the public how beneficial it is for them to resort to resolving complaints through the methods that will afford a settlement between themselves. Generally, the cases have increased, and in the majority of the years that we have operated, Manzini has normally taken the lead followed by by the Hoho region. And then the year under review, we saw Lubombo come third, and then Shiselweni was the one to record the least complaints. This has incidentally been the trend for the top two regions to be Manzini and Hoho in the majority of the cases.
And for international story, EU antitrust regulators have charged Meta with violating the EU's competition law. Brussels has found Meta's new pay or consent advertising model in breach of the Digital Markets Act, designed to ensure fair competition and rein in the power of big tech.
Another tech giant in hot water with the European Union. The EU Commission says Meta violated the blog's digital competition rules by forcing Facebook and Instagram users to choose between seeing ads or paying at least €10 to avoid them.
The preliminary findings concern the compliance of Meta with the DMA provision on combining personal data. The next step is for Meta to reply to these, to have a look at our file, and then, we see what the next steps are.
The findings come after a probe into Meta under the Digital Markets Act, which forces tech giants to give European users more choice online. The Commission says Meta's model does not allow users to exercise their right to freely consent to allowing their personal data from its various services, including Facebook, Instagram, Marketplace, WhatsApp and Messenger, to be combined to target them with personalized online ads. But Meta insists it's done no wrong.
Subscription for no ads follows the direction of the highest court in Europe and complies with the DMA. We look forward to further constructive dialogue with the European Commission to bring this investigation to a close.
If ruled non-compliant, the company could face fines worth 10% of its annual global revenues, which could equal billions of euros. And it's the latest of recent EU crackdowns on big tech. The Commission has accused Apple of continuing to restrict app makers from pointing users to cheaper options outside its App Store, and also recently charged Microsoft with violating the blog's antitrust laws.
And that's it for our business news. It's 9 minutes after 2. Stay with us. We shall resume after the ad break.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back. You're still watching Market View this Tuesday afternoon. Thank you for staying with us. Board members of different cooperatives have been warned against refusing to vacate office when their time has elapsed. The president of the National Cooperatives Federation of Eswatini, Sfiso Mhlongo, said this when asked how they ensure that cooperatives are held accountable by the mother body. This follows that the Ministry of Commerce, Industry and Trade has had to intervene and suspend the board of directors of the Eswatini Multipurpose Cooperative Union and Supervisory Committee in the light of a forensic audit. In-house business journalist Nelson Ntlangamatlai had a sit-down conversation with the president, Sfiso Mhlongo.
Thank you so much, Mr. Mhlongo. We want you to briefly explain to us how much does the cooperatives contribute to the country's economy?
Roughly, the asset base is plus or minus 2.8 billion. The asset base. The loans which are circulating in the industry is plus or minus 1.8 billion. The savings is plus or minus 2 billion. And this shows that there's growth in the cooperative sector, because as maybe we are talking about 12.4% of the population of Eswatini are members of the cooperative sector, which is a big number when looking at the population of Eswatini. In the economy, the cooperative are contributing much, especially in unemployment. The cooperative has employed a lot of people. Some are managers, CEOs, accountants, a lot of people. So in the unemployment of the country, the cooperative, they are playing a major role in that aspect and in improving the social lives of the people.
We have seen the Minister of Commerce, Industry and Trade, Mr. Mhlongo, suspending some board members of some cooperatives. How have you worked in order to ensure that cooperatives follow the laid down laws and procedures by the ministry and by this umbrella body that you are president of?
Thank you very much. The minister is true that he has tried to intervene in trying to solve the issue. The Act, the Cooperative Act of 2003, as amended 2023, is saying the board members must be in office for, the 2003 one was saying the board member must be in the office for 2 years, but it has been amended now. They have been given 3 years to be in the office. And the board member is allowed to be in the office for 2 terms, which is 6 years. After that, he should go for a cooling season. Then after that, he or she can come back. That's what the Act is saying. So after 3 years, every cooperative must have an HM, which is an elective one. And the Act is further saying that each and every year, a cooperative must have an annual general meeting, which is after 3 to 4 months after it ends, when it has audited its books of accounts.
Why do some board members refuse to vacate office? Because the law has stated that there are certain years that a board member or board members should be in office.
I cannot be sure why some of the board members are refusing to come out from the office. But basically, some of them, they are taking advantage of the members, because some of the members, they are not aware what is the Act saying about being in the office for how long. And some are taking advantage of the old age members. Maybe they are educated, maybe they are taking the advantage. But the one who doesn't want to move out from the office, they know exactly what they need to do as board members.
Mr. Mhlongo, what are some of the challenges that are faced by cooperatives? We know there are cooperatives like those that belong to the youth. What are some of the challenges that these cooperatives are facing, and how can they be overcome?
The challenge is that, especially in the farming sector, is the market. These farmers, they do their farming correctly and everything, but the problem is the market at the end. You'll find that we have got 5,000 cabbages, we are unable to sell them. We've got pigs, we are unable to get the market. The main challenge in the farming section is the market, which we plead to government maybe to assist the farmers, maybe to get market. Some of the gaps which we found in the awareness campaign with the cooperative, they were having challenges with regard to bookkeeping, keeping their books correctly, controlling their stocks, maybe even electing the right people to be in the committees. That's what we get when we're trying to assist the cooperative. Basically, it's the governance which was giving which was a big problem especially in the farmers' cooperatives. The governance was a problem, because you'll find that some other committees will stay in the board for more than the required years. So we're trying to give them what is the Act saying about term of office of every board member, and what is expected of the manager and the other subordinates in the office. This year we have planned to go to each and every Tingula center in trying to educate the members about the cooperative philosophy and what is need to be done as a cooperative. Basically, we are going with so many sectors, which is ERS, the cooperative college, which includes the law lecturer, which will be part of us in trying to enlighten the Swazis what is the Act saying about the elections. So each and every, the 59 Woodland centers will be visited in trying to sensitize the members how to run their cooperative, how to hold their annual general meetings, how to run their business, not to run it as, because a cooperative has got the social aspect and the business aspect. So if they run the cooperative, they should run it in such a way that they try to balance both the social aspect and the business aspect.
We have seen the central bank in monetary statements saying that Eswatini are highly in debt and they are struggling to pay loans. Are you advising Eswatini as cooperatives to manage their debts?
The Apex, which is relevant to the SACCOs, is doing something in regards to that one. They are trying to mount workshops on personal finance management, on how to manage your loans, how to downgrade if you are too much indebted. The SACCO side is handling that for the SACCO sector.
Okay, thank you so much, Mr. Mhlongo, for joining us on Market View.
That was Sviso Mhlongo, the president of the National Federation of Co-ops, enlightening us on the challenges or issues within the federation. Moving on, the Eswatini Revenue Service says the carrying of business losses forward have now been given a timeline. This is contained in the Tax Order Amendment Act of 2023 that came into effect on Monday this week.
The carrying forward of business losses. Remember, we've introduced presumptive tax. We have said in presumptive taxes for small businesses. So some businesses, they are under normal tax regime. That is, they calculate and find if there is any taxable, any net taxable amount or not. So if you find that you're in a loss, you are allowed to carry forward the loss. But the law now says you can carry forward the loss for a period of 5 years, not more than 5 years. Except for businesses in plantation and orchard. We know that plantation takes more than 5 years and orchard may take more than 5 years to mature. Another one is ring fencing of loss. You find that some businesses, some companies have got business units that are different. They work and then they incur loss. Another unit to work and incur loss. In our law, it's clear. It says if you have a business that is in farming and you have another business, say in construction, the loss from the construction cannot offset the profit from the farming. So that is the ring fencing. Construction, if there is a loss, you carry forward the loss under construction. Farming, if you have a loss, you carry forward the loss. So when there is a profit, we tax the profit in that unit that is profitable. So that is another one, the ring fencing of losses. We have pension provident, where the employer contributes, you contribute, and you find that sometimes people decide to change employment, decide maybe to resign, and maybe pursue other opportunities, but they don't want to use the money in pension, and also they don't want to use the money in provident. Now there's an introduction of the preservation fund. That is, that money that is there, it can be preserved and give you interest without being taxed if it's under the preservation fund.
That was Philman Shabang from the areas further explaining the tax order that came into effect yesterday on Monday. Let's go for an ad break. When we come back, we connect with Mr. Sbia.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back. You're still tuned in to Market View, the Tuesday edition. Thank you for staying with us. We'll now connect with in-house economist, Mr. Senel Sbia, for today's financial markets. Good afternoon, Mr. Sbia. Thank you for joining us this afternoon. President Ramaphosa made cabinet appointments on Sunday. Does it still have any impact on the rand this Tuesday afternoon?
Good afternoon, Lou, and good afternoon to the viewer. So what we are seeing happening in the markets in terms of the rand and the whole euphoria around cabinet appointments is the fact that the steam seems to be dying down now. Markets are now moving towards actual implementation. Markets are now moving towards seeing what this government will actually do. Such that if you look at what has happened today is, the rand has actually lost a bit of ground against all major currencies. But that's purely due to the fact that when you look at what's happening across the globe with all the data that has been coming out in the US on purchasing managers indexes and the elections, quite a number of things happening in Europe and in the US. So what that has led to is overall losses in terms of currency grounds from all emerging markets, and the rand was not spared from that. So the markets have moved from the euphoria, from the GNU euphoria, to now looking into what is this government of national unity going to actually be doing in reality. And the fact that we now have a bloated cabinet, the markets are also now trying to price that in and trying to see how this government is actually going to deliver, and also the time it took for us to have this government. So yeah, markets are now still trying to ponder in on all of those issues, Lulu. But yes, so as you've rightly asked, the elections in the cabinet still has a bit of an impact on the markets. But what we are expecting right now is markets are going to shift back to fundamentals and technical trading, and really just to look at performance of companies compared to really just focusing on what has been happening on the political front, Lulu. Thank you.
Okay, so moving on to commodities. When you look at gold today, it's doing quite well since it's trading at 2.3 US dollars. Take us through these figures and also take us through the Brent crude oil.
So what we are seeing with gold today, it seems to have lost a bit of ground, but what we are seeing, the story behind that is we are expecting the Federal Chair, Powell, to actually address the economy today or later on today, and really just to give a clear indication of where the economy is going to go in terms of the interest rate dynamics. So that is why gold is somehow taking a bit of a pause. So that's why markets are still trying to price in whether we are going to have an interest rate cut this year or not. And then in terms of Brent crude oil, what we are seeing there is, the geopolitical tensions seem to have eased a bit, and there is a spike in demand given that it's summer in the global north. So that is why, we can see global Brent crude oil trading at 2 weeks all-time high. So we haven't seen these prices in over a month to two. So purely due to the stronger demand. And if Governor Powell comes out today with positive news, we are going to see a further climb in the price of Brent crude oil. Thank you.
So looking at international markets, starting with the US markets, what reactions are the markets doing today, this afternoon?
What we are looking at in the US in the post-trading session, yesterday's trading session, and, knowing that we're going into July 4, which is going to be a holiday in the US. So markets are somehow pricing in, awaiting of what Powell is going to say today, and, still awaiting further economic data to come out. But what we are seeing in terms of the markets, the movement is, in as much as they may have closed a bit lower compared to yesterday's trading highest point, but still that's an all-time high. So they are closing lower relative to what they were trading on in the very same day, but relatively higher compared to how the other 2 months or how the past 2 months have been. So that actually comes in the background of, markets trying to really readjust their portfolios, moving away from your major tech companies to other companies in other sectors, just to really try to show off and improve their portfolios, as we have seen that the Silicon Valley is actually losing steam in terms of what people expected in terms of AI. The gains were expected in terms of AI to happen, and when it saw NVIDIA and Micron not positing those earnings, so that caused investors to shift their portfolios within the American markets. But still, we are expectant of a better trading session post what Powell is going to say today. And then if we move on into Europe, what we are seeing in Europe is quite a not so good picture in Europe. So what we are seeing there in Europe is the fact that you know what's happening in France with the election. And you know that London is also going into election on Thursday, July 4th. So markets are trying to price all of that in. So what we are seeing happening at the same time, because of Macron's decision to call a snap election, we're seeing Europe having to deal with elections in two of the major currencies of the major trading economies in Europe, that is in the UK and in France. So markets are a bit jittery about that. And on the build up towards the elections in London, we've seen the FTSE lose a bit of ground, and you know we are seeing France still losing a bit of ground, and Germany has also been caught in that favor, losing a bit of ground as well. So that's purely due to the fact that there might be major paradigm shifts, as we know that in France. We've seen power shifting from the left to the right, and what we wait to see the second round of elections this week is will that right-leaning power consolidation actually give us something more as time goes by? Is it going to be consolidated as the second round of voting comes in? So that's the story in Europe, and then when we move on into Asia, what we are seeing there is due to the poor performance of of the Japanese yen, what we are seeing there is that has actually somehow played good for the markets and has pushed markets upward because that makes yen-based securities are very much affordable in the global markets. So that is why we are seeing happening within Japan, and they've actually broken the 40,000 mark. It's something we hadn't seen in quite a couple of months. And then when we are coming back into mainland China, again, we are seeing some positive climbs there, but still below that 3,000 mark. And that is purely due to the fact that there are still some fundamentals within mainland China economy that are not moving as the global economy would have expected them to move. And we do hope that once we get more clarity in terms of the interest rate direction from the US, probably we will see mainland climbing above the 3,000 mark in this week's trading session. And then coming down into South Africa, what we are seeing there is markets have actually lost the election steam. So markets are now back into trading on fundamentals and technicals. So if you see today, the JSE All Share Index has actually come below the 80,000 mark. So that just lost about 400 points. So now markets are markets are now over the euphoria of about the elections, the GNU, the market-friendly type of government. So now what markets want to see is actual delivery. So we are seeing normalcy return to Johannesburg purely because markets are now really looking into the real issues of what is going to be happening to load shedding, what is going to be happening to logistics, and all the other issues that the South African economy has been dealing with. And then coming closer to home, when we are seeing Eswatini Stock Exchange, we are still at that very same level. There hasn't been much movements purely because we are post earnings season, and we have a lot of dividend investors in the local economy. Thank you.
Thank you, Sanile, for that overview of today's financial markets. And that's it for our program. Lomutla, thank you for joining us. If you've just tuned in, why not, you can still watch this episode on our YouTube page, Eswatini TV. We'll see you tomorrow. Have a lovely day.